Hello, my name is John O'Connell of ScaleUp Group, and welcome to our podcast today when I'm speaking with Adam de Courcy Ling, Chairman of Blackdot Solutions. The purpose of this 30-minute session, which is one of a series which we've titled SaaS Scale-Up's Pearls of Wisdom from Entrepreneurs, is to hear at first hand Adam's experience in obtaining growth funding this year, at least completed this year. Before doing so, a quick introduction to ScaleUp Group, which I founded and where I am executive chairman. So this is the very short plug. Please bear with me. What we do is to obtain growth funding in the range of £3 to £10 million for high-tech businesses, B2B, typically SaaS, and alongside that, we ScaleUp Group partners invariably co-invest. And for those entrepreneurs out there listening, it tends to have quite a nice symmetry that the amount we co-invest tends to exceed any fees we might charge you. So, but we're entrepreneurs and we understand what it is to actually grow a business and manage it, and also to raise funds ourselves. So, Adam, welcome and thank you for agreeing to share your reflections on your successful fundraise, which I'm delighted to say ScaleUp Group supported. First things first, please. Kindly tell us about yourself and your role in Blackdot, as well as what Blackdot actually does.
Well, John, thank you very much, and thanks for the opportunity also to talk about our experience of working together with you. Because you and your firm at ScaleUp were a big part of the success of our fundraising, so we're grateful for that, and it's good to talk about it a little bit. So Blackdot Solutions, our company, is it fits very much into the space you described. We're a B2B enterprise application software company. We have transitioned fairly recently from a legacy product to a SaaS business model and a new SaaS product, and that's one of the reasons we did the fundraising. And our product is an investigations platform which helps professional investigators to use a wide variety of information to solve complex investigative use cases. And the particular thing that we do is help those investigators to use open source information, which is typically live, unstructured information from the internet. So we help them to combine that information with other data sources and data sets, which are more structured and easier to handle. And we provide a data collection, data analytics, and visualization platform to allow people to do that. And we sell to four spaces. The two biggest are government and banking. So we're helping investigators to resolve things like drug trafficking, human trafficking, sort of the typical large-scale law enforcement problems. In the banking space, we're helping people to resolve enhanced due diligence on customers, or to make sure that banks are fulfilling their anti-money laundering or sanctions programs and so forth. And then we have a lot of customers in the corporate space who have interesting use cases around fraud, brand protection, and so forth, and then risk agencies. So that's what our company does. And the thing that we are really following is that open source information, the information that's available out there on the internet, is an increasingly critical data source for people to understand what's going on with their counterparty. And it's difficult to access and use and analyze for all sorts of reasons. So we help to solve that problem. My own background is I spent most of my career as a banker, so I'm a financial person. I became involved in this company as an investor, and I became a bit more involved in it. I first became an investor and then a director. I became more involved in 2019 when the company had hit a couple of issues. So I led a restructuring of the management team and some work that we need to do on our go-to-market model, which we started in 2019. And I've moved to the role of executive chairman. We now have a full management team, which we'll talk about a bit further, I think, in this podcast. But that's a very important part of the funding proposition that we have. So I'm executive chairman. I'm full time. I have a financial background, which I think you're probably going to come on to because it gave me a slightly unusual role in this transaction. I am an entrepreneur, but I'm not the founder of this company. But I'm very invested in it emotionally as well as financially. So that it's been a project that's I've been very close to for quite some time. So that's it. So I'm a financial person. I was an M&A banker in the past. So that's where my financial background comes from.
Yeah, you've in your typical understated fashion, Adam, you've, I think, underplayed yourself a little bit to the point where I tried to persuade you that you were de facto an entrepreneur and to enter for the Enterprise Awards, but you've politely declined, at least this year, but I'm going to keep
I probably haven't. I don't think I've declined yet.
But the fact that you've invested a substantial sum of money and then you did the restructuring, and if I may say so, you put together a first-class team. These are challenges of growth pains, I guess you might say, and come through, if I may say so, with shining colours. Many of our audience may not have seen the public announcements about how much you've raised and from whom and for what purpose. So perhaps you could elaborate on that.
Well, we in the past we were almost entirely a bootstrap company, not completely, but we since 2019 we had only taken on about £1 million of external capital, so we were running quite light on external funding. So in this round we raised just under £5 million, and our lead investor was Maven Capital Partners, who's a large UK fund manager that is particularly strong in the venture capital trust VCT space. Who you introduced us to, John, and I think your good relationship with them was definitely got us off to a very good start. And then we're delighted also that your colleagues also came in and joined in the round, and I think a bit over 20 of your colleagues invested personally alongside Maven in our round. So I think the final figure we raised was about £4.7 million, which was at the top end of our target, and we closed that in January of this year. So that was the amount, and the purpose of the fundraising was really three things. It was to double down on our engineering effort, because we've re-platformed the product and we have lots of exciting things that we want to do with the product. So that was one area. The second area was to further scale our sales effort. We have a very capable head of sales that we brought into the company a couple of years ago, and wanted to give her a bit more resource to do that job. And the third is that we sell mainly to large enterprise who look quite closely at our balance sheet and in the onboarding processes. And after several years of bootstrapping, our balance sheet could definitely have done a bit of strengthening. So that working capital stroke balance sheet was the third thing where this transaction was definitely very helpful.
Yeah, very good. And it did take a bit longer than we both had planned.
Yeah.
I know I was kind of hoping you'd fall the right side of our financial year, end of December, but
Oh dear, I didn't know
didn't
that.
quite make that, but never mind. That's pure detail. The length of the process, what would you put that down to, Adam?
So I think there are a few reasons. I think probably the biggest reason is that we started a bit later than we planned to.
Yes.
And that was driven by a couple of things. It was one reason was that we were negotiating quite a large and important partnership with a big US company, which we signed actually about a week before we went exclusive with Maven. So we were doing that in parallel with this process, which was the same people, the same team, and a similar sort of volume of effort. So that was one reason. The second reason is that we wanted to be properly prepared for the process, and the piece that we thought would be most important and would be stress tested most for the process, and this was also based on your guidance, was our financial model, and we spent quite a bit of time on that, and that we have quite a limited team of people who can do that. So that took a bit longer to finish than we had initially anticipated. So by the time we went to market, we were very prepared, but we decided not to go to market before we were completely ready. So I think I actually think that was the right decision, because we were then stress tested, and that model held up, and our business relationship with that US partner, I think, was one of the things that gave external people confidence in the business. So once we had got into the process, I think your bit, John, went at the timetable that you promised, and you did an excellent job, and thank you for that.
Thank you.
We had a good competitive process. We had very good people at the table. I think that hopefully we had a quality business, but also your existing relationships with these investors and the fact that you knew them, which we didn't, was very helpful to that process. So that all happened on time. And then I think the due diligence process and documentation, from my understanding, and you've done more of these processes than I have, they can sometimes take a bit longer than advertised. We had a big due diligence process for perhaps quite a small deal. This wasn't an enormous amount of money, but we had 8 different due diligence streams, which is quite a lot for a 40-person company to work their way through. So that took a little bit of time. Probably the thing that mainly added time during the execution phase was getting the investment documentation agreed. And there, I would say that perhaps we can talk a bit about later on in terms of advice, but I think we probably could have settled more of those things early on, and that would have helped in terms of the time that took. But we didn't go enormously over time frame. I think the late start was probably the biggest factor in that. And looking back on it, like all these things, it seemed like we were taking a long time at the time. Looking back on it, it wasn't such an enormous length of time. We signed a term sheet in September, and we nearly closed, as you say, for your year end. We didn't quite make that, so we completed in January. So it wasn't an incredibly long time.
Yeah,
it wasn't super quick either.
With the benefit of hindsight, would you, the next time, if you were to do it next time, would you cut corners at all, or not?
Well, I don't think we'd cut corners. I think the thing so there's a couple of things about that. One is that I think the thing that we would do is we would probably pay a bit more attention to the term sheet and agree things in the term sheet that you otherwise might have a discussion about later on. It's sometimes a bit hard to predict what those things are going to be, but if you've done these deals a few times, I haven't, but if you've done these deals a few times, perhaps there's some things you can predict, and things like when you're doing a small round like this, a £5 million round, you don't need to reinvent the wheel for the documentation. There's lots of technology available. There are standard forms, standard documents, and so forth. The BVCA has lots of useful stuff. I think being able to deal with those things in the term sheet, say you're going to use this form of documents, and these are going to be the key things that you're going to use, allows you to save a lot of time in the later bit of the process. I think we perhaps have a slightly unusual situation because we sell to large enterprise, so we are used to, we're not in the position that we can just send our customers our standard contracts and expect them to sign. I mean, I'm sure lots of your listeners have the same problem. That's a luxury that when we get to many times our size, we might be able to get to. So we have to deal with customer contracts that are given to us by our customers, and obviously we have to spend a lot of time to make sure that we're not signing up to something which damages our company. And when somebody sends us an set of investment documents, the approach is the same. So we have to go through it, quite closely. And my background probably makes me slightly more painful to deal with than the average entrepreneur, because I've spent a lot of time in the past dealing with these types of documents. But our approach was the same. These agreements, he's going to read these agreements again unless there's a problem. And if there is a problem, you want to know, what the position is in the documents. And so, and it's exactly the same approach that we take with our customers as well. But we don't read those agreements again unless there's a problem. And so we did go through those quite carefully, and that did take a bit of time to work through. I think not everybody would do that, and in all likelihood, for the great majority of situations, you will indeed never look at those documents again. And if you have agreed to things that you perhaps shouldn't have done, it won't matter. But then there's a circumstance where you do need to look at them because things have gone wrong or something's happened, and then you do need to look at them, and then you might regret it. And our approach was a bit the latter, and I think that probably did cost us a little bit of time. in a way, strangely, I think it was a little bit confidence building as well, because our investor, who we have an excellent relationship with, and we're delighted with the choice that we made with your help. I think they took away from the process that we pay quite a lot of attention in the way that we work to what we sign, and that's not just what we sign with them; it's also what we sign with customers, and that gave confidence. So it's sort of a little bit of a, in a way, it was as part of the due diligence. How does this company culturally deal with the obligations that that it's signing up to? Does it just sign anything that's put in front of it, or does it pay attention? And we are definitely probably a little bit extreme in the level of attention we pay, which can cost a bit of time, but it
I
helps.
think you're the only client we've ever had who renegotiated every single NDA.
Yes, exactly.
But yeah, I was in awe, shall we say? On a more serious point, the fact we had multiple funds involved and bidding to invest in you, and top marks for getting them interested like this, like that. I mean, was that worth the extra effort, you think?
Yes, definitely, John. I think it's because it's interesting when you're running a private company and you haven't marketed yourself to funds. There's a lot you don't know about your appeal to funds, about your valuation, about the way that you're seen, about the way the market is. So you're dealing with a whole sea of unknowns, and you've got to take some quite big decisions about who you're going to partner with, what valuation you accept, how much money you're going to raise. And I think having some real market information about what the value of the company is, what the topics are, what people are prepared to do, is very valuable. So you could say that it took a bit more time to talk to a number of funds or two, but which it clearly did. But it made for a much more robust decision that we could take. We could tell our other shareholders and ourselves that this was where the market is. This is what the topics are. This is what people say, and that's just very helpful. So we were very appreciative of that, and obviously, in the long term, we are going into partnership with whoever we choose. So we don't want to have too complex or fractious a discussion about valuation or terms. So it was very convenient for us that we could leave that to you.
Yeah.
And you didn't, so we appreciate that.
I think your point you're making is that you and through you and us assuring your other investors that you had properly tested the market as opposed to just taking the first offer.
Exactly.
There's a big sort of boost of confidence, isn't it?
Absolutely. And it costs more time, but it's a better decision that you can make. Absolutely. And I think we're very happy with the outcome, very happy with the investor we have, and it was a good process.
The thinking about the constant challenge of CEOs, particularly who may not have the luxury, inverted commas, that's the wrong word, of someone like yourself as executive chairman and with a fantastic eye for detail and having your financial background as well. They might be watching this and listening to this and thinking, how are we going to be able to do the same thing and get a similar good result from it?
So I think the first, I would say to that, the first thing is who can advise you, because the more you can outsource to an advisor, the better it is. If you're a small company, for all sorts of reasons, it's just the execution support, but also knowledge of the market. This is a transaction that is not part of your day-to-day business. It's not something that you do every day. So having somebody at the table who knows this market and knows what's going on is incredibly helpful. And you talked in the introduction about ScaleUp's role dealing with 3 to 10 million pound investment rounds. Though it's not super easy to find a good advisor to do that sort of size transaction, and ScaleUp is extremely helpful in being willing and able to do a very good job in that space. So for the first thing I would say is that having a good advisor who's committed to the company and knows the market and who knows the investors is extremely helpful. And the highest value is that you get the right deal with the right party. But also at the next level, there's lots of execution stuff that you've got to do, which an advisor can help you with. And I think the bits that I think the key to it really is good preparation. And if you can, because once you're in a due diligence phase, you've got a very intense period of quite significant distraction potentially for the company. You've got lots of people involved, people who are doing calls on DD who would rather be talking to customers or doing whatever their day job is. And so you want to keep that period as short and efficient as possible. You don't want to have that extended. And good preparation is having all your data together in the first place, maybe having a data room up and running before you go, making sure your model is very robust. It's going to survive analysis. You're not halfway through the process because somebody has found some fatal flaw in it. There's all those types of things are key and will save a lot of time. And I think that's, as we talked about earlier, that's a bit why we took our time to kick off the process, because we wanted all that to be all in a good state. And I think that is something that I'd advise people who don't have as much internal resource to do, is to focus on the preparation, and maybe to find somebody inside the company who can act as a point person for the deal. You're dealing with quite a lot of quite confidential information. You've got things like option programs. You've got the terms of all your customer contracts. So somebody with access to all that information is going to be somebody very, very trusted person in the company. The CFO would be an obvious person to do it. If you don't have a CFO, that there will be somebody else who probably has that type of information, who could play that type of role. If you've got somebody who can play that role, who is not necessarily critical to the day-to-day functioning of the company versus customers, that is amazing, because obviously the less you can distract the company with this process, the better. I think the biggest worry we had was that our business would come to a halt while we did this process, and I think that didn't happen because we were able to separate this process from the day-to-day running of the company, and that's quite difficult. I think we were quite lucky to do that.
That was very impressive, actually. And you talked about getting to know the funds, because 1 minute it's first date, and next minute you're inverted commas married, and one doesn't know how long this marriage is going to last for, and whether or not it's going to end up happy or otherwise. Again, answer this however you wish, of course. But since that marital moment, shall we say, in January, how have things progressed? Has there been, a buyer's remorse period, or?
Well, I'm the wrong person to ask about that, but you have to ask our investor. But there's no seller's remorse, I would say, if we're the seller. So I think we're very happy with the decision we made. So I mean, I suppose that the key thing that the investor wants to know is that the numbers that they've been given are roughly met, and we have roughly met the numbers that we gave. So I think that eases a lot of things. If there was a big divergence from that, I think that would be problematic. So I think the experience has been good. I think I assume that every investor has their own character, their own level of engagement that they take on, and the level of trust which they give to entrepreneurs to run the business, to their best judgment. Our investor, so far has been, very supportive, and they've been engaged, but not in a sort of intrusive way. So far we're very happy, and the business has also been performing, which I think probably helps.
That no doubt helps a lot. I don't know whether Melanie and colleagues at Maven have said this to you since, but it is quite unusual for a fund to find that the company post their investment actually is delivering as per the forecast.
Well, they haven't said that since. But one or two other people have, and that's reassuring. So And I
Yeah,
think
the
that,
other thing, if I could just
yeah,
add here, is that pretty unusually, um, they've early on, as did other funds, by the way, said they'd be extremely happy with you continuing as chairman, whereas the kind of default for them normally is to find an independent inverted commas chairman. They don't, even though the completion document might say otherwise, they never force a chairman typically on a company, but it definitely tends to be someone they introduce in the first instance. So I think it's from, again, giving you a compliment here, but it's deserved, that they had full confidence in your ability to act in an even-handed, balanced way as chairman.
well,
Is
that's kind of you to say that, John. I mean, I think the due diligence process is obviously has a few different layers, and there's the technical stuff that's going on, all the work that's going on. But the other thing that's going on is that you're developing a relationship with your investor.
yeah,
You're talking a lot. You're dealing with all sorts of topics which come up, large and small, and quite often there are judgments to be made, and you get a good feel of the style of the other party when you're going through that. And I think, for us, that was certainly a very positive experience. And I hope it might have been a decent experience for Maven as well, because we were dealing with a very experienced, very able partner this transaction, and that was very reassuring to us. That
what struck me during the dialogue you had, lot of them, was that whenever your comments, you'd say, well, this is what we plan to do, but on the other hand, this may not happen, and these are the issues, pluses and minuses, and so the whole tone of two adults talking together, as opposed to someone overhyping, someone the other side not believing a word they've been told, that wasn't the tone at all. It was two adults trying to achieve a positive outcome for both parties.
well, maybe we're a bit too English about that. It's just
Well, yeah, it works, doesn't
but
it?
it's also,
Yeah.
yes, I mean, that's definitely a cultural thing as well, and we try to manage the company in that way. And from our perspective, when we bring an investor on board, this is somebody we're going to be working with, we expect for a few years, and it needs to be a relationship of trust. We can't, if trust is broken, then
Yeah,
everybody's going to have to spend a lot of time reading these agreements. So
yeah.
we're hoping very much that we can work on a basis where people trust each other, and it's the culture of the company internally as well. We speak very openly, and we try and address problems jointly and together, and
Was
and
it
the same with our investors. So we have to, and we've got outside investors already.
bullshit free zone, you might
Well,
say.
I wouldn't claim, it wouldn't go for so far as
No,
to claim, but
you wouldn't be as
we probably
impolite
should have a
as
bit more
me.
bullshit in our company.
No, that again, that's one of these subtleties which say, I think key word here is trust. Uh, Trust can take a time to build and can be destroyed in a flash,
Absolutely.
can't it?
Absolutely. And I
Um,
think we wanted to create this is a private process. We were talking one-on-one to people through your introduction, John. Your relationship, you put your relationship at stake, if you like, by introducing us to these people. And so, for all of those reasons, everybody is that there is some obligation, I think, on all parties that we're honest with each other, and we give our best assessment. And I think that's what we try to do, and that means sharing things that we worry about as well as things that we're excited about. So
Before we finish, Adam, we talked a lot, which is the purpose of this session, really, on the process and success and issues, etc., etc. But I think the audience would probably like to hear what your plans are for the business. Again, answer that as you wish. Going forward, are you going to be little old Englander forever, or are you going to conquer the world, or something in
well,
between?
We have our plan is to grow the business quite ambitiously. I probably shouldn't share the exact numbers, but because we're a private company, but we have quite ambitious plans to grow the business. We are very excited about our space. Just as we work quite closely with our investors, we also work quite closely with customers, and that's the culture of our company, and we are being drawn into interesting new use cases and interesting sort of derivative use cases of our product by customers all the time. We are very excited about the space, and our basic philosophy is that open source information is a data source that you can't do without in a lot of enterprise use cases, and we are solving at one level a really basic problem, which is that in lots of large enterprises, people have difficulty accessing the internet at all because of cyber security risks. So sometimes the problem that we're solving starts at a very, very basic level. So we believe very strongly that that's a valuable problem to solve, and we think there's great opportunity for us.
And of course, regrettably, you're in a growth market, aren't you? Investigations.
So we're in a growth market, and we do. I mean, at the moment, we have about 2/3 of our revenue outside of the UK, and interestingly, we have about 30% of the companies also owned outside the UK. We have two large shareholders from Germany, and so we definitely think internationally, and we sell across Europe and North America. We do more and more in the US. We do a great deal already in continental Europe, and we are definitely not a UK only company by no means. We never have been, and we are very much thinking in global terms, which
fantastic.
In our segment really means Europe and North America.
That's a good theme to sort of finish on, Adam. And any final thoughts, reflections, which not been covered?
I mean, just to say that I think the value that ScaleUp added was very significant to this, because you knew the investors and you knew this marketplace in a way that we didn't. This is not our day job, and you brought all of that, and you brought your existing relationships. And I think the value of having somebody who's willing to do that and has those relationships, particularly for a smaller transaction of this sort of size, is very high. So many thanks for doing that for us, and I think it made a really critical difference to getting this done. And then in the detail, we just say good preparation, and as you've mentioned a couple of times, trying to keep your BAU business separate from this transaction. It's really hard, but it's very, very important, because otherwise your business will just stop in the water, dead in the water, for the months that you're doing this transaction, which is something we were very keen to avoid, and you helped us to avoid that, and kept going. And I think the result now is that our company is actually was still moving when we came out of this process. It hadn't just drifted to a halt.
No stuttering. And well, top marks to you and your team. And you were a delight to work with, and it results for everything. So Adam Courcy Ling,
early days,
Chairman of Blackdot Solutions, thank you so much for this participating, and your pearls of wisdom to other entrepreneurs out there, and long may your success continue. Thank you once again.
Same for ScaleUp as well. Thank you very much, John.
Thank you.